Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Guys, if you have been waiting for the NVIDIA top and fall, well, we've got the math to show you when to expect that. Well, let's dive in.
Trade Genius.
All right, Bob, this is a very interesting chart correlating basically tech to the Fed.
Yeah, and look at the semiconductors. So we'll throw the chart up here. You can read the chart yourself. The message I wanted to share with you guys is that we talked yesterday about the rotation out of tech into what they call energy commodity finance kind of move with the rates lowering. Okay, now we're going to get a little bit more granular. There's one stock that is just egregiously overvalued. In fact, Jesus had to move over so they had a seat at the table next to God with Huang running the universe. I mean, that's how they promoted this guy. And basically, we're at saturation levels. There's a lot of things that people are talking about with NVIDIA that are very interesting. You have the Chinese front running ahead of sanctions, number one. You have a lot of channel stuffing. SMCI is becoming visible in that area. You have what they call a lot of sibling selling and buying, which means just basically a bunch of trading back and forth with cross ownership companies to make your sales look better. And then, NVIDIA pulls the old game of investing in companies that need to buy their product, and then they load them up with inventory. And none of this is illegal, but all of it is kind of a misidentifying the true value of the company. But that doesn't matter because institutions and algos are busting out their math models here saying what happens when the Fed cuts. And this is what happens when the Fed cuts. So institutional money will simply leave this environment, and you're going to have no choice. An interesting thing about yesterday was when NVIDIA reported, a couple things was basically their growth is slowing officially, right? And it held up initially from the announcement, and then it kind of sold off towards the latter part of the day. And they're not in the Qs directly, but they affected the NASDAQ because they're in a lot of other ETFs with NASDAQ stocks, and people exit those ETFs, causes a general drain in NASDAQ. So as NVIDIA goes, the markets are going to go. Just the bottom line, you don't have to think any harder than that. And when the Fed cuts rates, tech goes. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. So I hope you guys can do the A to B to C, connection here and draw your own conclusions. For me, that puts a couple interesting trades in play, right? So we can buy the Yield Max short NVIDIA, which basically is a short strangle ETF, high yield called DIPS. You can go to NVDS. You can go buy NVIDIA puts. You can short NVIDIA. Don't know why you'd ever want to do that, but you can. Or you can. I think there's NVDL puts. You can buy too. That's a leveraged long NVIDIA. And so I may do one or a combination of those as we get closer. I'm already in dips with NVDY, Phil, as a pair trade. I'm going to make that one increasingly biased towards dips by the Fed meeting. So I'm prepared, and then I may take an additional, basically an over allocation, as we get into October. So that's what I have. I'd like to throw it back to you and get your thoughts.
Yeah, I think the only thing I can say is that, you have one anomaly around COVID, which was, COVID in itself was kind of anomalous with just the abruptness of it and the quick Band-Aid that was put on it with excessive printing. So I think you have to kind of throw that result out. Otherwise, your 1 month, 3 month, and 6 month forward returns from a rate cut, which we know we're going to be getting here in a couple of weeks, is quite negative. So I think it goes kind of in line with, our timing in terms of the market and tech and things like that topping out. But, there's not a lot of upside here historically after a rate cut in tech. And it's starting to look a lot like, what you would expect to see from the dot-com bust and also from 2007, which wasn't so much a tech bust as it was just a general, we'll call it economy bust. But that's why we like to say that, the markets like to run up into a rate cut. I know today's the last day of the month. There's a lot of shenanigans, a mixed day. But if you zoom out, I mean, we've been having a pretty strong rally as we get closer to September 18th. I think that's going to continue. So, but after that, you have to be extremely careful, like Bob says, and you're going to want to start looking at ways to get defensive after the rate cut. And it may extend past that a little bit. But if you're hoping for, this party to continue well into Q1 of 2025, you're going to be sorely disappointed.
Yeah, absolutely. Guys, if you want to trade with us, go to TradeLikeAGenius.com, TradeGenius.co. Got some great specials. We're preparing the patient here, so we have some really good strategies that we've been sharing with our subscribers, and then, taking advantage of any opportunities that happen, short swings or day trades. So come check us out. I think you'll like what we do. TradeLikeAGenius.com. Enjoy the rest of your Saturday and Sunday, Monday. We're not going to do a podcast on Monday. Phil and I are going to try to enjoy a little time off, which we rarely get. And we'll catch up to you on Tuesday. Thanks. Bye.
Trade Genius.